Joining us today, I'm very happy to welcome Stephen Stewart to discuss Orecap Resources with us today. And Stephen, welcome.
Thank you, Adrian. Great to be here. Great to see you in person. I usually speak to you on Zoom, so it's so nice to see you here in London.
Likewise, it's great. I think the last time was probably pre-COVID that we saw each other in line, maybe at the Canadian Mining Symposium. So again, thank you, and it's great to see you too. So tell us, you've been working on Orecap. It sounds like it's more about financing. Could you explain to people who aren't familiar with Orecap what you're up to?
Sure. So Orecap is a little bit different than your typical junior. As you may know, we've got the Or Group, which is a collection of 7 different junior exploration companies, one of which is Orecap. And Orecap is unique in the sense that we're not looking to put our money into the ground. We're looking to invest to acquire assets. The thesis is now is the time to buy high-quality assets. The situation is such, well, everybody knows we're a very cyclical industry, and we happen to be, I don't know if we're at a bottom, I hope we're at a bottom, or maybe Orecap hopes that the bottom extends a little bit, because that offers the opportunity for us to acquire high-value projects at low prices. And so, I think it's very important to distinguish between what is value and what is price. They're two very different things. They throughout the a long enough period of time, they converge. But right now, there's a huge discrepancy between value, meaning what is valuable, what will be valuable, and what price you have to pay to acquire them. The example I'll use is an asset that we just acquired last week. It's called the Thierry Copper Mine. It's a former producer. It's in northern Ontario in the Pickle Lake District, very mature. The owner was a junior mining company, focused on British Columbia, had debt, couldn't raise money to pay it off, into Orecap. So we went in there, we worked with the lender, we got the lender to become a shareholder in this new asset, as opposed to the lender of the vendor, if you will. And we acquired it for, we contrived, basically total control of this asset. It's the largest copper resource in Ontario, for pennies of what it would cost to find and replace that with all the drilling. So the asset needs work. It's been not invested in properly for the past 10, 15 years. But when you can get in at a base cost for effectively the cost of a drill program, because that's the price that we paid for it. And it's all because of the situation of where the market's at. Now, if the market was on fire and all these companies were able to raise money, there's no way we'd be able to probably even acquire this asset, let alone at the price. So that's effectively what Or Group has been involved in doing for the past 10 years, is sort of being opportunistic. And then Orecap, more specifically, has evolved into it's our public company expression. And so in the past, it has spun off American Eagle, which has been a big success. It spun off QC Copper, which is one of the largest copper resources in Eastern Canada. So now, and Orecap retains positions in all those companies. It has dividended out shares in both those companies directly to Orecap shareholders. I think our shareholders can expect us to continue those dividend-type models. But now Orecap has exposure to 2 of the 3 largest copper resources in Canada. It also has a joint venture agreement with Agnico Eagle. So Agnico Eagle's spending their money on our projects. As I said, we don't want to spend our Orecap's cash in the ground. We want to use that cash to acquire more opportunities like Thierry, spin-off companies like American Eagle, and get ourselves in front of the wave. I always say the wave of the return of the miners, as Mr. Friedland will say, or he calls it the revenge of the miners. But the truth is, we will be popular once again. And so my thesis is to acquire as many good quality assets as we possibly can, and sit there and put ourselves in front of that wave, because it will be a wave, and there will be a tremendous amount of investment that comes into the space when the stars align.
Well, I think you're very well positioned to kind of understand what is valuable in the exploration space, having done it yourself, or been part with these companies that have actually achieved success with the Or Group. And so I think a lot of investors, they see the opportunity, let's say, in these exploration companies. They see they've been beaten down. What is it that you look for when you are trying to value these things, and what makes a great opportunity for you as you try and make this decision?
It's very subjective, and my interpretation of value may not be yours. And so we do have a very specific view on what is valuable, and we I guess, express that it oftentimes in brownfields environment. It's very difficult. I mean, I come from I guess you call it a traditional finance background where I'm used to, valuing things with basis points and spreadsheets, whereas the junior industry, it's not like that at all. You cannot chase these basis points. It's really about seeing the big picture. And the big picture in brownfields environments is how much money has been spent, and then get yourself into that data room. I guess that's what sort of separates our group from the typical investor, or even the typical group, is that we have the ability we just don't read the 43 101s. We look at the raw data, and we manipulate it and see, is it real, is it not real, does it hold together? Is there, we take a very sophisticated look at what has been done, and they say, does this have the potential to be a mine? I mean, I think it all starts there. We won't take on a project if it doesn't have the possibility to become a mine. Now, everybody's heard the 10,000 to 1, anomaly situation, and that's true unless you are a sophisticated group. You can dramatically reduce those odds. It's still, you're still going to miss more times than you're going to hit, but you can certainly reduce those odds. And so I'd say that that's where we excel, is our ability to assess these projects, provided it has the data. If it has no data, you're just sort of guessing. Now, we've taken some guesses, and sometimes, we've swung and missed on those. But, for example, we're Baseload Energy, which is a company that was a spin-off of a spin-off from Orecap. James Sykes went out there and made a grassroots discovery. I mean, we didn't know he was going to do that. I mean, so I don't say we got lucky. You got to be good to get lucky. But those are super high risk. We don't want to take that level of risk right now, because we can go up the risk curve and buy something that's been well understood, but just happens to be up the creek. So those are the types of opportunities. We also like access to infrastructure. I don't like helicopters. I don't like flying in them. I don't like paying for them. So almost all projects we have are drive to them, have power. If they're on the rail, great. I mean, that's, again, Thierry is on the rail. Its concentrate was sent to the Horn Smelter, just like Opemiska, our QC Copper project. It was sent to the Horn Smelter. On the power grid, all these sorts of things are huge value drivers. It's hard to quantify that, but you want those big, expensive line items there so that you can just focus on developing the geology, and that once the time comes to build it, and hopefully we're not the group that builds it, but those who will can build it faster, less permitting, less cost.
Excellent. So it sounds like you're trying to mitigate as much as risk as possible and just find, in a sense, the most valuable things at the greatest fire sale prices. Like it sounds like you just did with this Thierry project. So are there, I guess, as we're wrapping up here, moving forward, do you see other opportunities on your radar? I assume you can't talk about them, but do you see other opportunities out there that are as tantalizing, or is that fairly unique? What do we have to expect in the coming weeks and months?
We're working on something that I think is going to be the most exciting, project or portfolio projects we've ever acquired. So we have lots of things in the pipeline. We've hired a lot of help recently for Orecap specifically. We brought in a CIO, a guy by the name of Jerry Brocklesby, very experienced in the fund management business for 30 years. He's financed most Canadian CEOs, junior mining CEOs over the years, so he's got relationships. So he sources opportunities, brings them to us. He's been great. And we brought in another gentleman by the name of Gotham, who is more on the database side, looking to source active projects proactively on our behalf. So we're scouring Canada, at least, and maybe the globe to some degree for opportunities. They're very hard to find. Because you have to, again, does this have the chance of going into production? And then you have to find, is it actionable? I mean, that's the hardest thing traditionally, but as companies get more and more distressed, actionability becomes more possible. So yes, we've got things in the pipe. Who knows how long these things take? We've got a great team, but there's no question there's going to be more deals on the horizon.
Stephen Stewart, CEO and Chairman of Orecap, thank you for joining us.
My pleasure.